Yo, what's up, guys? Welcome back to the PiP show. I hope you guys are doing good. But I'm not sitting alone. I'm sitting with my co-host, Yolisa. My name is Thalu, and yeah, how you doing, my boy?
All is well, all is good, can't complain. It's just good to be back for past 2 weeks. And yeah, we're facing some technical problems, but we're grateful to be here and we're back in it again.
This podcasting thing, I thought it was easy, but it's not easy. But yeah, people will
No,
understand. We start somewhere, and that's why we kind of like
yeah,
learn every day. It's more like the market. You don't just start and then be able to make profits. You start, you learn, and you grow within that until you find your strategy and what works for you. Other than that, how was the market for you
yeah.
this week?
The market was nice, break even, lukewarm. It was just good. Few losses, few gains.
And that's good, man. On my side, I was trading synthetic indices, so it wasn't that bad. I'm also like doing more research on that because I'm finding it more interesting because there's no news that side, man. That's another world that we live in. There's no news, there's no Trump, there's no wars. Anything can happen. We trade Monday to Sunday. I like it because sometimes at work I don't have time to analyze and execute. So for me, it gives me an opportunity to look at the market on weekend, to see how the market moves, to look at the market after hours, right? Because you will find that with the traditional market, the real market, because after hours, let's say after New York close or London close, the volatility then drops, right? So on
Mm,
synthetic, the volatility it doesn't change; it stays the same. It's been programmed to stay the same, right? And just to give people just a glimpse of how it works, so it's
yeah.
how candlesticks are printed is based on random numbers that are thrown by the system that's generated, right? So let's say
Good, eh?
as it's moving different. It's nice that time, bro. Let's say now, are you trading, let's say VIX, right? So you will find that it gives you a 10, right? And then it stays here. And then it gives you a 20, and then it jumps up. It gives you a 10, and then it comes back. And then it gives you a 15, then it goes up. And then it says 20 up, see 25 goes up. Then it says 10, then it comes back down, right? So that volatility, it's not the same as when you're in the market where you can just enter Euro USD and then the market can just keep on going up and going up and going. Something happens, boom,
Yeah.
and then now you kind
Yeah.
of like asking yourself, what's happening? you know.
I like the way you're coming with it. But now the question is now, someone else is listening. It's like, okay, this is quite interesting because maybe they're also struggling between on the times and certain events when it happens. Like, "Oof, why did it go up? Can't there was maybe certain news that was made it whatsoever. So for someone else that maybe not into it but want to be into it, they would be like, now is the strategy that I'm using on the forex market is it gonna actually correlate in the synthetic?
The thing. So that's a good question because what I discovered is that not synthetic are programmed to mimic the real market, right? Which means it needs to follow, it needs to it they because I think the foundation of how the real market moves, synthetic are programmed that way, but then they're not programmed to
Mm-hmm.
understand when there's news, when there's no news. They are programmed to say, okay, cool, create a high, create a low, create a high, create a low, create a high, create a low, create a range,
Yeah.
right? Okay, bounce between the range once for a certain period of time. Okay, break the range, retest, do that. So when I was doing my research is that you will find that supply and demand will work on certain synthetics, right, for a certain period of time, and then
Okay.
support and resistance will work on synthetic for a period of certain time, right? And then you'll find that trend lines will work on certain synthetic. So not every strategy works on any synthetic. So you will, for example, the way you trade, you will need to first go back test, right? And analyze and analyze and
Oh,
analyze. And it's good to
okay,
back test.
okay.
But then once
That's
you're done
good.
back testing, it's good to forward test, which means that you need to analyze and see how it plays out. Analyze, see how it plays out, and so on, right? So I would
That's
advise
good.
someone that wants to jump on it, go and I did post a video, I think yesterday or Friday. Go and hop in that video and just watch how I do analyze one of it. But not all the strategies work on all of them. So
Mhm.
you need to go on synthetic, choose one, stick with it, analyze it. If it works for your strategy, that's where
Yeah.
that's where you will have to stay.
That's a good way of saying it. That's a good way. But I was really interested. Is the strategy gonna work? Is it totally different? Oh, okay. So you follow your own strategy, but back test it
100%.
before.
Because
Okay.
if go and analyze everything at the same time, you will think that every it works on everything, and then you will start taking losses a lot, and then think that it doesn't work. Not only to find out that
Mm.
it only works on certain synthetic only. Because I know with VIX 75 trend lines work a lot, support and resistance work a lot. Sometimes supply and demand works on that, but then you find that on others it doesn't work a lot. Boom, for example, doesn't respect trend lines, right? Doesn't respect supply and demand because there's spikes and crash. You know, do you understand those spikes? Stuff like that. So, but that's a topic for another day. You know, if you want to learn more about that, I'll advise you just do your own research. Um, but I will be doing a series also about that, so you can also check that on the channel. But yeah, today is not about synthetic. We are more about the PiP show. We just want to see and talk about what the market has for us.
Keep.
You know, so what do you have for us, my boy? What do you have for us for this week? And what's catching the market? You know,
Keep
what's
show.
pushing the market? What's pushing the market? Yeah.
It's just unfortunate that last week when we actually recorded, we had some technical problems. Our focus was on the interest rate, right? And if I can't even go back, I was like, eh, post that video, but we couldn't, eh? Well, the interest rate cut went, the interest rate cut by 0.25%, which is the first time since December.
So you're saying it's the first time they cutting since last year December.
Yeah,
Okay, so that's about a
this
year,
is the first cut since December 2024.
2024. Okay, okay. Let's dive deeper into that. Let's dive deeper into that. Let's dive deeper into that. What's happening there?
It 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 might go further again this year. I'm not sure when,
Okay,
but it's also say oh this year also. Why are they cutting the rates? Maybe because of the unemployment rate. It's maybe because of the inflation rate that's still above. There's many. But the effects, let me just put it in sugar quote. The effects that could be that it could be cheaper borrowing now. What do I mean by
okay.
borrowing? Low interest rate make less expensive for banks to borrow.
Wait. Okay. I just wanna before we continue, I just wanna make sure that I understand this correctly. So make borrowing cheaper for banks. So meaning that it's going to cost banks less to borrow people money, or is it going to cost banks less for them to borrow money from somewhere? I just wanna like get this into my 5-year-old brain and understand it because I always struggle when it comes with interest rates and how they work, right? So is it going to make borrowing cheaper for banks?
Yes.
So what about the consumers? What about us now? Is it going to make it cheaper for us as well to borrow money?
Yes, it's going to make it cheaper also to borrow money.
Okay.
But the catch is the catch is those that are making savings, it's gonna decrease. Their savings rates are decreasing. So let's say you made savings for the next 5 years or 4 years, it's decreasing more. You're able to borrow money on a lesser
Okay.
price, but the savings that you have
Gonna or they won't end as much high as they
as
used to.
much.
The interest
Yeah.
interest rate.
So here's the catch. The minute you save, the banks are actually using your money.
All right. All
You
right.
you
All
think
right.
you're adding money in your bank, but
Okay.
the banks are making loans and they're making loans at a cheaper price. While you are saving money in, the banks are making loans with your money at a cheaper price. It's like I'm putting 2 rand in, I'm looking to make a 1 rand. But while I'm putting that 2 rand, you as a bank inside, you're making 4 rand out of that
Out
two
of the
rand.
two, right? See, a lot is happening in the background. Okay. Let's hear more. Let's hear more. I have more questions in my brain, but let's hear more. Let's hear more of what you gotta say.
Okay. And then the others are that the lower rates for consumer, like mortgages and business loans. So it's going to be lower also for consumers and business people that are making loans for businesses is going to be lower, which is okay. It's understanding. Stock markets often responds positively to cuts as they lower cost and increase profit potentially. Okay. And then the other way, the risks of it, that the inflation is still above the target. Like, oh, these are the risks. The inflation is still above the target. Even though the rate has been cut, inflation remains somewhat elevated. So the Fed has to balance stimulating growth without letting inflation get out of control. So the inflation is still high.
So they're trying to cut rates to control inflation. So at the same
Yes.
time, as much as they are okay, so unemployment rate is high, right?
Yeah.
And then they are cutting the rates so that they can ease the unemployment rate, so that businesses can be able to borrow money, be able to create more jobs, and be able to like obviously spend and whatever they're gonna be doing. And then
Mm-hmm.
while they're doing that, people are gonna be having more money to spend because they're gonna be paying less on their mortgages, their
Ah,
houses, their cars.
eh.
Which now inflation is already high, and now people are gonna have more money again to spend, which might cause inflation also. Is that what am I understanding correctly by that? So when I have more money to spend, can that affect inflation to go up?
Mm, I have to look back on that one. That's actually a good question on that one. I have to look back on that because that's actually an interesting question because the inflation is already up.
Let us know in the comment what you guys think. Let us know what in the comments.
What do you
I
guys
think this is
think?
gonna be a learning curve for everyone, right? If you have more insight about inflation, interest rates, and how these things works, comment below. Let us know because I think it won't only benefit us, but also the people that are the viewers that are watching in the comment section. Just let us know, because it's quite interesting, man. Because I want to understand as to if because I get the picture now that they're cutting interest rate, which gives consumers and the businesses more breather to spend, borrow money, be able to be innovative, create jobs and stuff like that, which is very nice. What causes inflation though? Just a dumb question. What causes inflation? Like for me to understand, I just want to like get it in my brain, like
Oh,
because inflation is where now food costs higher, right? It is more expensive.
yeah.
Normally, that will be caused by higher interest rate, if I'm understanding correctly, because it will. This means that you, as the business owner, you are paying more interest on your loan, which now allows you to cut cost on your businesses. Where now you're gonna fire people to save cost, increase prices, so that you can cover the bills and be able to cover the loan,
Okay.
and then obviously that inflation. So now, if the rate is being cut, are the businesses going to cut their prices? And where consumers gonna get more money to spend? Like, you know, please let's engage in the comment section, guys, and just let us know what you guys think. Let's engage in the comment section. This is very interesting, right?
A lot, a
Lord, bro,
lot,
like
a
it's
lot.
crazy.
Because because like and the thing is why I'm so focused. Yes, it's paused, but the thing is it's the first time it happened since last year. We should take that into consideration, and there's still going to be more be done. Like we have to consider that also.
Okay, I get the point. That point. There's a point that we said. So the stock market reacted
Yeah.
or reacted positively on that. Is that what you said? The stock
Let
market
me.
reacted positively because of the card rate.
Okay, the stock market often responds positively to cuts that are lower costs and increase profit potentially.
Oh, I see. I see. So this means that the more the Fed's cut rates, the more the stock market obviously will rise. So we are looking at new higher highs as time goes.
Yes, all in stocks.
Because I saw Nasdaq like the previous week that we had a very higher highs there. Let's just hop
Let's go there to
let's just
Nasdaq.
hop on the chart and just to see what's happening there.
Yeah, Nasdaq actually went to the
And though,
it actually broke it the highest high.
if we look at this at monthly,
Yeah,
it broke
yeah,
the
yeah,
highs. Yeah,
yeah.
it broke the
It
highs.
broke
It's
the
crazy,
highs,
hey?
which by going back to the stocks, why it responds like positively
Mm.
when the
Just look at that, bro. Like, so now we can see we can start seeing market. Okay, so this is what I think will happen on my side. So we can just start seeing this. This is not financial advice, guys, but I'm gonna put a disclaimer as we on the
Ah,
on the start of the video.
hey, but I think you should put a pitch in,
Yeah,
hey.
this thing of saying this is not financial advice all the time. It's boring. Okay, so I see we had a very, 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 very new highs. So that means we can continue seeing the Nasdaq going up as well. Let's just look at US 30. So normally whenever this happen, I like to look at US 30 and S&P 500.
Why you said it?
US 30, it's most of the top industrial companies. And obviously with tech, Nasdaq is only tech based. But also want to look at other industries like uh
Excuse me.
medical industry, manufacture and stuff like that. So if we look at that, let me just quickly delete the remove drawings. Okay, we also have a new high created on US 30 as well. So damn. So the stock market will looks bearish. S&P 500.
No, sometimes I always ask myself,
Yes,
when it reaches its higher highs, right?
yes.
Like the highs, maybe when would it pull back? But surely what goes up must
Has
come
come
down.
down.
But the question is when? We don't know when, but when? When is the right time?
Yo, everything is just on the highs, bro. Everything is just on the highs. So, because
Exactly.
if the S&P is up, let's say now at the new higher highs, with that, because it's the top 500 companies, right? And in the US, there's like the whole economy, right? That's not like the whole economy. So everything at this point just gives us a positive vibe that if the Fed's gonna keep on cutting these rates, then we can continue to expect the market reacting positively. Because I saw something that said that they might cut two rates, they might cut
Yeah,
two
yeah,
times this year again.
yeah. Two times this year,
Again.
which is one. Yeah, 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 yeah.
So
But we don't know
we
when.
don't know when. Oh shit.
That's
And
that's
how
that's
often do they cut the rates though? How often do they cut the rates?
usually at the quarterly, ne? Quarterly, which is the fourth.
I'm not sure. I'll have to check that.
I think it's quarterly. I
I'm not
think
too
it's
much invested in
quarterly.
interest rate. I never understood it, but as much as I grow and become better in this trading thing,
Mm,
it be
It's getting more
yes.
interesting now, right? It's getting more interesting. Yes, I don't trade events or what, but it's just giving you that.
you know, you
What's
you
going
want to
on?
be part of everything, bro.
Yeah,
Mm.
like what's going on? What's going on?
Looking at NAS, so we can expect the market to push back, right? Let's just go to daily. Okay, so daily reacted nicely on the very nicely. Oh, this was on Wednesday. This is the day when the interest rate happened. The Wednesday on the 17th of September. Yeah, go to 4 hours. So we can see the market already retested and pushed up. So obviously, market open, we might continue to get push up, but then obviously a retest will come to the supply demand zone and then continue pushing up. Or looking at a higher time frame, we do need a pullback. To answer your question, when you say when do we know if the market will come back, when keeps on going up, you know, Nasdaq when I started trading, I hated it. You know why? It was during COVID, right? At that time, the rates were cut. That thing kept going up and up and up and up and up. Bro, there was a time everyone was saying that buy and sleep. buy and sleep. And then I was just like, nah, man. When are we coming to drop? I want to sell. It will never sell. It just kept going up and up and up. But yeah, man. So I wouldn't expect a big drop as now. Obviously, there must be something that will cause the market to drop. But do you think on the positive side, with so much high inflation, and obviously now that we're cutting the rates, do you see the market pulling back anytime soon? Do you think inflation will drop? Or like I don't know if I'm phrasing this question correctly, right? Will it
No, you
ever
don't.
be on an okay phase? Like, okay, cool. Now it's okay. Inflation is okay. Interest rate is okay. Like, will we ever be in that phase?
No,
It will never.
no, no, Chief. Because there's also one that they are looking for is 2026. And the rate, okay, let me go back.
Mm.
The other cut that's gonna happen again, it's not guaranteed.
If they will cut the rates. So
Yeah,
the
it's not guaranteed.
okay. So they will also
Yeah.
they will obviously look at that based on how everything is performing. Damn.
Yes, 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 yes,
Damn,
yes,
damn, damn.
yes, yes,
Share
yes,
below what you
yes.
guys think about this, right? Interest rate and how it's affecting your trading as well. Are you making money because of cutting rates? And are you seeing positive results coming from this? You know, or what are your thoughts on this? And it'll be nice to hear from you guys as well. Um, I am looking at DXY, right? I'm looking at DXY. DXY currently
Sure.
respected these lows here, right? And let me just look at
Yeah, it did actually, it did.
yeah, because last time we were looking for it to drop. Let's not look at monthly quickly. Oh, so we just reacted on a monthly area, but we dropped and we broke monthly. Huh.
The monthly still looks like dropping.
Yeah, monthly for me still looks like dropping, man. I think what's gonna happen is we might stay in this range here. Maybe we might come back here, right? Or
Consolidate
consolidate
there.
here. If price staying maybe around this area here until maybe they cut the rates again, or I don't know, or any major thing that's going to affect the dollar that will allow us to break out of this. But looking at this, I see price just playing around there until we break out of this range, especially this area here, right? This is the most interesting area for me, right? At this point now, if we break above here, and then obviously we can expect price to come retest and then push up here, right? Which will give us an opportunity for, let's say, for the dollar to kind of like go up. Obviously, this will give a breather for the gold. It would give an opportunities in your euro USDs, your GBP USDs, and so on. I won't be analyzing those pairs, but this is my view when I look at when I look at the XY on how it's behaving at the moment. And yeah, man. Other than that, I think that's gonna be it for my side.